$500 an ounce. That number sounds insane the first time you hear it. It sounds like something a permabull says on a podcast when they're trying to get clicks. But here's the thing: when you actually sit down and do the math, when you look at the historical precedents, when you map out the macro conditions that would need to align, $500 silver stops being a fantasy and starts being a serious analytical question worth asking. And that question is exactly what we're going to answer today. Not with hype, not with wishful thinking, but with a realistic, step-by-step timeline breakdown that lays out exactly what has to happen when it could happen, and what the road from here to 500 actually looks like. If you've ever wondered whether that number is genuinely possible in your lifetime, this is the video you've been waiting for. Let's start by grounding this conversation in reality, because I think the biggest mistake people make when they talk about extreme silver price targets is they skip the foundational work. They jump straight to the exciting number without explaining the mechanism. So before we talk about $500, let me show you why the starting point for this conversation is not as crazy as it sounds. Silver's all-time nominal high is approximately $50 an ounce. It was touched briefly in January of 1980, driven by the Hunt brothers cornering the silver market, and then touched again in April of 2011 during the post-financial crisis commodity surge. 2 times in modern history, silver has approached that $50 level, and 2 times it pulled back hard. So when people hear $500, their brain immediately says that's 10 times the all-time high. That's impossible. But here's the critical piece of context that changes everything. Those $50 peaks happened in different monetary environments than the one we are living in today. The dollar has lost an enormous percentage of its purchasing power since 1980. The money supply has expanded by multiples since 2011. The scale of global debt, deficit spending, and central bank balance sheet expansion that has occurred in just the last 5 years alone is unlike anything in modern financial history. When you adjust silver's 1980 peak for real inflation, not the official CPI, but the actual erosion of purchasing power that economists who study this seriously calculate, you get an inflation-adjusted equivalent somewhere between $150 and $500 an ounce, depending on which monetary deflator you use. $500 silver is not 10 times the all-time high in real terms. In certain inflation-adjusted frameworks, it is simply a return to the previous peak. Let that sink in for a moment. Now let's talk about the timeline, because the question isn't just whether $500 silver is possible. The more useful question for anyone thinking about this seriously is when, under what conditions, and through what sequence of events does that number become reality? And to answer that, I want to break this down into 3 distinct phases. Think of them as the setup phase, the ignition phase, and the acceleration phase. Each one builds on the last, and each one has specific catalysts and timeframes attached to it. The setup phase is what we are living through right now, and the setup phase is characterized by something that doesn't feel exciting. It feels boring, it feels slow, it feels like nothing is happening. But underneath the surface, the structural conditions that precede every major silver bull market are quietly assembling themselves. The supply deficit is the foundation of the setup. For multiple consecutive years now, global silver demand has exceeded global silver supply. The world is using more silver than it is mining. The gap is being filled by drawing down inventories, the physical silver that has been accumulated in vaults and warehouses over decades. Those inventories are finite, they do not replenish themselves, and every year that the deficit continues, the cushion gets thinner. This is not a short-term trading dynamic. This is a multi-year structural imbalance that is building pressure in the market the way a coiled spring builds tension slowly, quietly, and with increasing force. Layered on top of the supply deficit is the industrial demand supercycle. Silver's role in the global energy transition is not a story that gets enough attention relative to how significant it actually is. Solar panel manufacturing is consuming silver at a pace that analysts are revising upward almost every year as installation targets get more aggressive globally. A single solar panel uses a meaningful amount of silver. Multiply that by the billions of panels that China, Europe, India, and the developing world are planning to install over the next decade, and you have a demand number that is genuinely staggering. Add electric vehicles, which use silver in their electronics, charging infrastructure, and battery management systems. Add the AI data center build-out, which requires advanced semiconductors that are silver-intensive. Add 5 grams network infrastructure. Add military and aerospace technology. The industrial demand story for silver over the next 10 years is one of the strongest fundamental cases for any commodity on the planet, and all of this is happening while the supply side is structurally constrained. The setup phase also includes the monetary backdrop, the debt levels, the deficit spending, the central bank balance sheets, the gradual erosion of confidence in fiat currencies that has been building quietly for years. None of this explodes overnight, but it accumulates, it compounds, and it creates the dry tinder that, when ignition happens, burns fast and hot. So when does the setup phase end and the ignition phase begin? Based on historical patterns and the current trajectory of the key variables, the setup phase likely has somewhere between 6 months and 2 years left to run before the ignition catalysts start firing. That puts the beginning of the ignition phase somewhere in the window of late this year through the end of next year, though markets don't follow calendars, and this is an analytical estimate, not a guarantee. Before we get into the ignition phase, if this kind of deep dive breakdown is exactly the kind of content you've been looking for, hit that like button right now and subscribe to the channel. We break down the precious metals market at this level of detail every single week: the macro, the fundamentals, the timelines, the catalysts. Subscribe right now so you don't miss the next piece of this silver story as it develops. And now let's talk about ignition. The ignition phase is where the move from current prices toward $100, $150, maybe $200 an ounce begins, and the ignition phase has specific triggers that you can actually watch for in real time. The first and most powerful ignition trigger is a decisive shift in Federal Reserve policy toward rate cuts, not just one token cut, but a genuine cutting cycle that signals the Fed is pivoting from restrictive to accommodative. Every time the Fed has entered a genuine cutting cycle in an environment where inflation was already elevated, precious metals have performed strongly, silver in particular, because of its dual nature as both a monetary asset and an industrial metal, gets a double boost: the monetary demand from falling real yields and the industrial demand from improved economic growth expectations. Watch the Fed. When they cut meaningfully, silver will notice. The second ignition trigger is dollar weakness. The dollar index and silver have a well-documented inverse relationship. When the dollar weakens, driven by rate cuts, by deteriorating fiscal conditions, by loss of confidence in US debt sustainability, or by a shift in global reserve currency dynamics, silver priced in dollars gets an automatic tailwind. International buyers can afford more of it. Global demand picks up, and the price in dollar terms rises to reflect that increased global purchasing power. The conditions for meaningful dollar weakness are arguably already forming: the fiscal deficit, the debt trajectory, the geopolitical diversification of dollar reserves by countries like China, India, Saudi Arabia, and Russia. These are slow-moving forces, but they are real and they are directional. The third ignition trigger is a geopolitical shock or financial system stress event. Markets can absorb gradual change. What they cannot absorb cleanly is sudden disruption. A major geopolitical escalation, a conflict flaring up in a critical region, a supply chain shock, a financial institution failure, a currency crisis in a major emerging market. These are the kinds of events that trigger rapid, sometimes violent flows into precious metals. Silver's smaller market size means it moves faster and harder than gold when these flows hit, and in an environment where the setup phase has already built up structural pressure in the silver market, a geopolitical shock doesn't just move silver, it can launch it. During the ignition phase, based on historical analogs from 2010 to 2011 and from 2019 to 2020, silver could realistically move from its current levels to somewhere in the range of $80 to $150 an ounce. That move might happen over 12 to 24 months once the ignition triggers start firing in earnest. It would feel dramatic in the moment. Headlines would start appearing. Retail investors who ignored silver for years would start paying attention. FOMO, fear of missing out, would start entering the picture, and that shift in sentiment would itself become a driver of further price appreciation. That's the self-reinforcing dynamic that characterizes the middle stages of a precious metals bull market. Now let's talk about the acceleration phase, which is the phase that actually gets silver toward that $500 number. And the acceleration phase is where things get genuinely extraordinary. This is not the phase where silver grinds higher. This is the phase where silver moves in ways that make mainstream financial media run breathless headlines, where people who have never owned a piece of silver in their lives start calling their brokers, where the narrative completely shifts from silver is an obscure commodity to silver is the most important asset in the world right now. The acceleration phase requires something beyond the ordinary catalysts we discussed in the ignition phase. It requires what analysts sometimes call a paradigm shift, a fundamental change in how a meaningful portion of global capital thinks about money, inflation, and asset preservation, and the conditions for a paradigm shift are arguably closer than they have ever been in modern financial history. Here is the scenario that gets you to $500 silver in the acceleration phase. You have a global debt crisis that forces one or more major central banks to monetize government debt at a scale that makes the 2020 money printing look modest by comparison. You have a currency crisis, potentially in the dollar, potentially in another major fiat currency, that causes a generational shift in how investors globally think about the safety of paper money. You have a physical silver shortage, not just a paper market squeeze, but an actual inability to source physical silver for industrial delivery that creates a genuine panic bid in the physical market. And you have the retail investor wave, the institutional pivot, and the sovereign accumulation all happening simultaneously in a market that is structurally tiny relative to the capital that could potentially flow into it. Under that scenario, which is not guaranteed, but which is also not science fiction given the trajectory of current macroeconomic and geopolitical conditions, the acceleration from $150 to $500 an ounce could happen faster than almost anyone currently anticipates. The 1979 to 1980 move in silver saw the price multiply by approximately 10 times in less than 12 months. The 2010 to 2011 move saw silver more than double in under a year. When silver moves in its acceleration phase, it does not move slowly. It moves in a way that catches the vast majority of market participants completely off guard. So putting this all together, what does the realistic timeline actually look like? If the setup phase runs its course over the next 1 to 2 years, and if the ignition phase begins sometime in that window and plays out over 12 to 24 months, and if the acceleration phase follows, then a $500 silver price target becomes a realistic analytical possibility somewhere in the 3 to 7 year time frame from today. That's not tomorrow, it's not next month, but it's also not some distant generational event that you'll never live to see. It's a plausible outcome within a medium-term investment horizon, driven by forces that are already in motion right now. The honest caveat, and this channel always gives you the honest caveat, is that nothing about this is certain. Markets are complex, policy responses are unpredictable, technological changes could affect silver demand in ways that are difficult to model today, a genuine breakthrough in silver recycling technology or a substitute material in solar manufacturing could change the supply-demand picture. A return to sound fiscal policy by major governments, however unlikely that seems, could reduce the monetary debasement pressure. These are real risks and they deserve acknowledgement. But here's the thing about tail risks and base cases. The base case for silver over the next several years, even without the extreme acceleration scenario, is genuinely constructive. Supply deficits, industrial demand growth, falling real yields, dollar headwinds, these factors alone support significantly higher silver prices over time. The $500 scenario is not the base case. It's the scenario where multiple bullish factors converge simultaneously in a compressed time frame. But even the base case points meaningfully higher from current levels, and that alone makes silver one of the more compelling macro stories available to investors and traders today. Before you scroll away, I want things from you right now. First, drop your silver price target in the comments. Where do you think silver is in 3 years? In 5 years? I genuinely want to know what this community thinks, and the range of responses is always fascinating. Drop your number below. Let's build a picture together of where the people who are actually paying attention think this market is going. Second, share this video. If you know someone who has been curious about silver, someone who's been watching the macro picture and wondering how precious metals fit into the story, someone who is trying to build a realistic framework for thinking about long-term asset values, send them this video. Hit that share button right now. You might be giving someone a perspective they've never encountered before, and that's worth something. $500 silver? Crazy? Maybe impossible. The math says otherwise. The timeline is real, the catalysts are identifiable, and the setup is already building. Stay informed, stay patient, and we will see you in the next one.